from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Broadcom makes it official, striking a deal to buy VMware for $61 billion. We will have all the details on how one of tech's biggest deals could reshape the cloud and chip industries coming up. Plus, I'm joined exclusively by Google Cloud CEO Thomas Kurian. I'll get his thoughts on that Broadcom deal, plus how Google and its cloud customers are weathering this market turmoil. And how one startup raised a new round with all female investors, 75 of them. I'll speak to investor Kara Nortman and Solve co-founder Heather Fernandez about how more companies can change the gender balance of their cap tables in one fell swoop. All of that in a moment, but first I want to get a look at the markets where tech stocks staged a comeback. Ed Ludlow here with the latest. Ed, finally some good news.
Yeah, finally. We saw kind of this broad equity market rally, tech at the heart of it, retail at the heart of it. We'll touch on in just a moment. You see the NASDAQ 100 up 2.8%. Biggest jump for that tech-heavy index in a week. It was interesting because I was going through the Bloomberg. It's the first back-to-back gains we've seen, 2 days of gains on the NASDAQ 100 in almost 4 weeks, which kind of shows how things have been recently, right? Very much in the red. And you see that across the technology sector. Semiconductors up, the mega caps also up. If there was an area of pressure or some selling across financial markets, it was in altcoins. You see Ether on your screen. There's green there because we're going into the next day's session, but it's at around $1,800 per token, well below the 2,000 level that technical analysts are looking for. Come with me into my Bloomberg terminal. Let's call it right now. Let's end it right here, because the NASDAQ 100 on a weekly basis is in the green. It's Thursday. Let's just call it, because then that way we snap 7 straight weeks of declines. It looks like we've turned a corner. You can't hang your hat on 1 week, but my goodness, do we need some positivity? Do we need some green? We're up almost 4 percentage points on the NASDAQ 100 so far this week. Please, Friday, don't ruin it. I've had enough. A big part of the story when you come back to me in the studio is earnings. NVIDIA are actually missing estimates, particularly on the forecast, but that stock up 5%. The market sanguine. Macy's, incredible, up 19%. Lots of confidence, upgrading their profit outlook. People still want to buy fancy stuff. I love fancy stuff.
Ed, how much do you think all the M&A we're seeing, this big tech deal, the number of deals we've seen in general, is a signal that maybe we're turning a corner?
Well, it's interesting because I joke about that chart, but there is a feel-good factor, right? A lot of activity, a lot of M&A in the tech sector. Twitter up 6 percentage points on Thursday. Tesla up almost 8%. And the big story here, of course, is Musk adjusting the financing package for his bid to buy the company, getting rid of the margin loan component and bringing in more equity financing. Some bullishness that this deal might happen. Of course, the other big story is Broadcom-VMware. Massive $61 billion deal. Bloomberg scoop. We were first to report that they were in talks. We got official confirmation on Thursday. What does this mean for the company? What does this mean for the health of the technology sector broadly? It's a really interesting timing.
Indeed. Ed Ludlow, thank you. I want to stick with that Broadcom deal for VMware now and bring in Angelo Zeno of CFRA, as well as our very own Liana Baker. Liana, your team broke the news of this deal. Here we are. It officially being announced. Talk to us about the nuts and bolts, the new things that we know now that maybe we didn't know earlier this week.
Sure. So we saw the exact price of the deal, although it does keep sort of fluctuating because it's 50% cash and 50% stock. So it'll change day by day. But we did see that it's about $61 billion, which is a pretty big premium for VMware, but maybe not as high as it would have been had it not been for this tech sell-off. Another interesting angle on the deal is that VMware can solicit other offers. So we're going to be monitoring whether there's a bidding war and who else could emerge, because they have 40 days to potentially find a new buyer.
Angelo, are you thinking there could be a bidding war here? Are there other suitors out there?
I mean, there are likely others that might, pick up the phone and inquire about it. But to be honest with you, as far as the terms of this deal is concerned, the price here, I actually think it's a very compelling offer out there for VMware investors. And at the end of the day, I do think this deal kind of goes through, via the hands of Broadcom.
Liana, what do we know about how Broadcom intends to run VMware? Will it stay independent? Which of Broadcom's services will they emphasize? Which might be de-emphasized?
So I interviewed the Broadcom executive Tom Krause today, who helped engineer the deal, and he mentioned that they're going to rename the whole software division of Broadcom-VMware. So I think VMware almost is sort of going to run the rest of Broadcom's software. So we'll have to see, but it may take a year for the deal to close. So we won't see anything just yet. But Broadcom does like to keep its franchises intact. I'm sure they'll try to, raise margins, but I would expect that not a lot will change once the deal closes.
So, Angelo, how competitive do you think a software portfolio within Broadcom under this VMware umbrella will actually be?
I think Hock has done an absolutely fantastic job here, kind of transitioning the company around into one that's also heavily software driven. And I think this really is going to kind of be that crown jewel for their software business. It really doubles the size of that business, right? So it gets them to nearly half of their revenue base there. The run rate was about 25% of sales. So at the end of the day, I think this definitely kind of significantly improves the growth profile of that software business, which is extremely important. This was a business that was kind of growing very low single-digit pace. When you kind of look at some of the assets they've acquired, a lot of those acquired assets was really kind of just from a free cash flow potential, just improve the cash flow generation of that company. What VMware does here is it really kind of catapults at least the growth potential within that software business towards one that's more kind of mid-single digit range. So definitely more compelling, I think, long term for that software business within Broadcom.
Liana, we were looking at a chart of the big tech deals that have been done in the last few months, going all the way back to Microsoft and Activision. Are you expecting more big deals this year? Are we moving into an environment, given what we're seeing in the markets, given valuations coming down, given potentially companies looking for a safe exit, are we moving into a time of big time M&A?
Well, the tech bankers I talked to would love to say, sure, there's going to be big deals and deals beget more deals. But you have to understand that Broadcom is a very unique animal. They've been searching for a big elephant acquisition for years. They hadn't done one since 2019. So that's a company that really likes doing deals. And I wouldn't necessarily say that Broadcom's competitors are suddenly going to follow suit. But it is interesting that the tech sector has been one of the bright spots of the M&A market, which is down year over year. So software companies especially are very resilient. So I'd expect we're going to see probably some more big deals this year, which will keep me busy.
Well, and Broadcom did want to buy Qualcomm a few years back. It didn't happen under the Trump administration. Angelo, are you expecting any regulatory pushback here?
I mean, listen, I think as far as this deal is concerned, it's definitely going to get looked at. I mean, initially, if you would have kind of asked me, I'd say there's very little overlap between kind of Broadcom and VMware here. But at the end of the day, I mean, clearly both companies operate significantly within the data center group, and as a result, there definitely could kind of be some concern with how Broadcom operates kind of that VMware business along with its chip business, as well as listen, I think at the end of the day, there is definitely geopolitical pressures going on out there. So when we start thinking about getting the necessary regulatory approvals across certain regions like China, I'd imagine a region like that probably will drag their feet, similar to what they've done in other deals. So I know Broadcom is looking for a deal to kind of get done by the end of fiscal 23. I wouldn't be surprised if that kind of drags further than that.
Liana, what are your Broadcom sources saying about whether Hock Tan will be doing more deals, or is this it for a while? It's a big one.
So I would say, as Angelo mentioned, there's a lot of regulatory bodies that have to weigh in on this. So I don't think Tan wants to, muddy the waters with more deals. They're really going to be focused on getting this one through and whatever it takes. So expect Broadcom not to do much except focus on this and then integrate it. So it could be a while before they do anything this big.
And Angelo, more broadly, how do you think this deal will actually impact potentially change the cloud market? Will it make much of a change?
I don't know if it changes things much. I think it just gives Broadcom a lot more power at the end of the day. I think it gives them the ability to kind of leverage or wield their power a lot more than maybe some of their peers or competitors out there want them to. And whether or not that ends up kind of being a sticking point when they kind of have to kind of get the necessary regulatory approvals, I think remains to be seen. But at the end of the day,
Okay.
I mean, could it have an impact? Yes, it likely will.
Angelo Zeno, CFRA, Liana Baker, who helped break this story earlier this week. Liana, great job. Thank you. Coming up, Google Cloud CEO Thomas Kurian will be with me. I'll ask him about that Broadcom deal, plus his outlook on how Google Cloud keeps growing in the midst of a macro market downturn. This is Bloomberg. With inflation putting pressure on just about everyone, Apple is raising salaries for workers across the U.S. by 10%, also in the midst of a tight labor market. Joining us now, Bloomberg's Mark Gurman, who, of course, covers Apple. So Apple raising salaries for corporate and retail employees, right, Mark?
Yeah, so that's right. In the face of inflation, other pressures globally, obviously in the face of unionization when it comes to retail employees, Apple's doing a few things. Let's start with the retail. One, they're raising the minimum salary for hourly workers. That's for retail, that's for AppleCare, other hourly workers, from $20 per hour to $22 per hour. Now that's 10% from last year, that 20, and it's closer to 50%, the company says, since 2018. In terms of corporate and more generally across Apple, they're raising their overall compensation budget for this year. So that's going to result in some salary increases, base salary increases in the US and globally for salaried employees, not hourly employees. And they're also bringing up raises. Typically, those are done around September. The company told employees are going to bring that up to around July now for both some corporate teams, as well as the hourly workers.
Meantime, you're also reporting that Apple is planning to keep iPhone production flat, in part because of all of these macroeconomic headwinds, the pressure on consumers. What exactly do we know?
Yeah, there's two ways to really look at this, right? There's the positive and there's the negative. Let's start with the positive, right? The positive is that the overall smartphone market, led by Android, is in not a very good spot right now, right? You're seeing those companies do job cuts and hiring slowdowns, and you're seeing people buy Android phones to smaller degrees than they were in previous years, right? A lot of that has to do with inflationary pressure, the war in Ukraine, and other factors globally. Right. And so Apple's ability to keep units flat from 2021 to 2022 in the face of a larger slowdown in the smartphone industry, obviously that's a good thing for Apple, that they're not guiding down in terms of their unit output. Now, on the negative, Apple has a major iPhone upgrade plan for this year. That's the iPhone 14. It'll look mostly similar to the iPhone 13, but it's a much bigger update than the iPhone 13 was to the iPhone 12. So Apple's not going to be increasing its units, even though they have this bigger handset update than they did last year.
Meantime, let's talk about what else Apple has to come this year. WWDC now coming up in a couple of weeks. The official invitations have gone out. It's going to be Christmas in June, they say, for developers. What are you expecting to happen at this event?
Yeah, so WWDC, this is going to be a pretty significant one. You're going to see a pretty large update to iOS with iOS 16. You're going to see changes and new apps and new designs for some apps across the board. You're going to see big multitasking improvements for the iPad. You're going to see some new audio messaging features. You're going to see a new lock screen for the iPhone. And you're going to see major updates to health on the iPhone, as well as the Apple Watch. You're going to see some smart home compatibility improvements for the Apple TV and the HomePod. Like I mentioned, the iPad's going to get a pretty big update. And the Mac is going to get a little bit more flavor from iOS and the iPhone interface as well. So a lot to look forward to there. I don't believe you're going to see a full-blown unveiling of the Apple mixed reality headset. That's probably going to come later. But obviously, augmented and virtual reality is going to be on the minds of lots of developers at this year's conference and, of course, in the future.
When you say later, how much later? Is that something we could see this year?
I believe the headset I believe it's possible we could be doing one of these shows a year from now, and I could have my headset on. Obviously, I would look ridiculous, but what I mean to say is I think it'll be available by this time next year.
Huh. Okay, and what happens come September? You know, obviously WWDC is typically where we see, the unveiling of Apple's next generation of software. September is where we see the next generation of hardware. What are we going to see this September?
Yeah, I mean, I think the pattern for this September and the fall launches this year is going to probably be quite similar to what you've seen from Apple in the fall launch periods in previous years. So you could imagine that the iPhone 14 and the new version of the Apple Watch will be unveiled in September. I think the Apple Watch, actually, interestingly, is going to be one of the bigger new pieces of tech from Apple this year. For the first time, there's going to be 3 new models, right? So a lot to look forward to if you're an Apple Watch fan as well.
Mark Gurman for us there. Thanks, Mark. As always, coming up, Google Cloud CEO Thomas Kurian with me next. This is Bloomberg. In the midst of a massive market downturn, Google Cloud numbers were a ray of sunshine in Alphabet's latest earnings results. Google's cloud business growing 44% in the quarter, though Google is still a distant third to AWS and Microsoft's Azure in the cloud infrastructure market. Joining me now to talk more about how Google will continue to scale, Thomas Kurian, CEO of Google Cloud. Thomas, great to have you back with us. So I'm so curious what your outlook is on this market turmoil and what you're seeing in terms of demand. Are you seeing any signs of a slowdown in spending?
We're seeing that the market is entering has some volatility in different parts of the world, but technology is seen as helping organizations, address supply chain shortages, serve customers better, get online digitally, and so demand for cloud remains very strong for us.
What's your take on this Broadcom-VMware deal, and how will it change or potentially reshape the cloud landscape?
Broadcom and VMware are both partners of Google, and we're thrilled that they are looking at moving forward together. We think a lot of customers use a combination of VMware and Google Cloud together, and we have a strong program with them to help people migrate VMware workloads to the cloud. So we look forward to continuing our work with both companies.
Now, Google Cloud is still growing, as I said, but it is third to AWS and Microsoft,
Yes.
And there's a lot of work to do to close that gap. What is the secret weapon going to be? How are you going to scale your market share? And how long is that going to take to see you get closer to those other competitors?
Well, we are seeing very strong demand for our products, whether that is new kinds of infrastructure we're delivering. We are now delivering infrastructure capabilities, not just to run IT workloads, but telecommunications network, the announcement we had with Bell Canada, for example. We're seeing a lot of interest in our cybersecurity tools to protect people's networks and applications and data in the cloud. And we're seeing very, very strong interest for our analytics and data products, which are being used. Recently, there was a case study we did about UPS optimizing how they route trucks using our capability for analytics and data. So we remain focused on providing great solutions with customers, bringing the innovation of Google to customers, and doing so at scale around the world. And if we do that well, we'll continue to grow, and we'll continue to grow and gain market share as we have been these last 3 years.
You recently did a sustainability survey that found that 50% of executives believe there's hypocrisy in their organization on this topic. How so?
Sustainability, what we found from the survey, number one, it's a super important priority for 80% of organizations around the world. Yet they have difficulty, 35 to 40% of organizations struggle with being able to measure their progress because the data about sustainability is not as easily measurable for a variety of reasons. And a number of organizations now need help to progress towards their sustainability objectives. And we at Google are helping many organizations do that.
Now, how do you make sure that hypocrisy doesn't exist at Google? And this has been a criticism of all the big cloud companies. For example, you do work with oil and gas companies. You do sell your services to those companies. Where do you draw the line?
We sell our services to oil and gas companies not for exploration and production, but to the environmentally clean or the green parts of these companies for work that they're doing. We're also helping oil and gas companies decarbonize in a variety of different places. And we help them with things like distribution, et cetera, in their retail stores and other things, but we're not doing work in the exploration production business. The second, we do help many, many companies in the sustainable energy business, both by providing our technology to them, as well as being the largest procurer of renewable energy in the world. We power our data centers and our global network of cloud regions using green energy more and more, and we've been carbon neutral for 14 years now, even as we provide technology for many organizations around the world to run their IT in a more renewable way.
Does Google still have that deal with Aramco, for example?
We work with Aramco's system integration division, not with the oil and gas division. And we work with their system integration division to provide our technology to customers in different parts of the Middle East. We have said that again and again, that we don't work with the oil and gas division within Aramco, but with the system integration arm of Aramco.
Now, Google did recently strike a deal to buy Mandiant for $5.4 billion. I know the goal is that this will help enhance Google's cloud offerings. Quickly, how would you characterize the cyber threat landscape right now, especially in the midst of this ongoing war between Russia and Ukraine?
Cyber threat landscape is changing in the kinds of threats, the scope of the threats, the scale of the attacks. And we at Google, along with our technology, help people detect threats, protect against them, and analyze if they have been compromised. And we are seeing strong growth for our product portfolio, Chronicle, Simplify, a lot of our cybersecurity products being adopted by regulated industries like financial institutions, commercial customers, critical infrastructure organizations like telecom networks and utilities, as well as by government agencies.
Okay. Thomas Kurian, CEO of Google Cloud, thank you for joining us today for an update. All right, coming up, giving women a seat at the table, specifically the cap table. I'm joined by Upfront Ventures' Karen Nortman and Solve CEO Heather Fernandez. They're with me next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Well, venture capital firms like Sequoia and Y Combinator have been sharing their playbooks on how to weather stormy market conditions. And as startups begin to focus on the fundamentals, once again, another key element is ensuring fair representation on their cap tables. My next guests found a way to raise their latest round from all female investors, and they're here to share their secret. I am joined now by Heather Fernandez, the CEO and co-founder of Solve, as well as Karen Nortman, managing partner at Upfront Ventures and a founding member of Allraise. Karen, Heather, great to have both of you back here on the show. So you managed to not just get all women on the cap table in this round, but 75 different women investors. Heather, how did you do it?
Well, let me tell you a bit of the story, Emily. So, as you know, people talk about fundraising as a very easy thing. As every founder knows, it's not. It's stressful, it's arduous. And when I completed my Series C financing in fall of last year, I called my good friend Karen Nortman, frankly, for my victory lap. In that call, she said to me, for 20 years, we've been talking about cap table diversity, how important it is to bring more women and women of color onto cap tables. Let's use this opportunity to make some space and figure out a way to really drive that in this round for Solve, and we made it happen.
And you made it happen fairly quickly, as I understand it, right, Kara? I mean, just give us a little more of the how, because you've got a lot of venture capital firms out there who say they can't find enough talented women to add on as partners.
Yeah, no, I mean, I think what ended up happening was, I think a couple things. Heather and I are fortunate enough to be doing these jobs now for 20 years. We're much, much younger than we look, or older than we look, perhaps I should say. And so um, we we reached into our networks, and our networks are specific people at some specific stages of their careers. So we reached out to a number of senior women in tech and actresses and people that we knew were active angel investors. But then we took it a step further and we said, listen, we really want to use this as an opportunity where there's a lot of demand. Heather had many term sheets. It's a company, Solve is serving 1 in 5 Americans now, which is pretty awesome. To say, reach out to a woman in your network who we may not know, ideally a woman of color, but a woman who is just as talented as you, who is either in angel investing and we don't know or wants to get into it, and invite them to join. And it had this snowball effect. In a way, it's a bit like the Freemasons, which is, were groups of men in the olden days where Paul Revere would yell to another group of men. He wasn't just yelling into the streets of Boston. And that's how the revolution spread. And it's finding these loose connectors that brought it into others. And one quick example there is a woman named Layla Seika, who is a longtime Salesforce exec, and she brought it into the Black Venture Institute. And so she brought in a terrific group of Black angel investors, and we had a lot of different examples of that.
Revolution is a perfect metaphor, and good to hear how you are leading this one. Heather, if there's a blueprint for other startups, other founders who want to do this, what are 3 simple steps? If maybe you don't have a network that goes back 20 years of powerful women.
Yes, I got you. Number 1, decide to do it early. This is something that for me was the 11th hour. It caused a bit of a scramble and frankly was really intimidating. So 1, decide early, align that with your board as well as your internal team. Number 2, I'm going to say tap your network. We have a 20-year-long relationship, but every founder has investors. You have professors. You have people in your world who are connected to others. And it was really managing that network that enabled us to do it so quickly. 3rd, find a back-end partner. We use a family office. You can use AngelList or Carta. And number 4, this is the final one, set guidelines. In our world, because we were trying to bring in new investors into growth investing, we reduced the minimum down to 0, but we decided we would do it over a constrained timetable. And that ended up enabling us to meet our goals and do it very quickly.
Okay. Now, I want to talk a little bit about the market environment, Kara, because obviously there's public market turmoil. Startups are having trouble raising new rounds right now. We're seeing hiring freezes and even layoffs. In times of turmoil, often women take a step back. Investors invest in what they know and they understand rather than taking that risk. Are you concerned that could happen now?
Yes, I am concerned that can happen. And I think, the message to put out there is that now is the best time to take risk in a way that is good for you as an individual. But we're so emotional about risk. And actually, the great thing about venture is that, we are building the long-term trends, and the problems we need to solve are bigger than ever. And so I think it's really important, though, that each individual really understand their risk profile. And if you were going to allocate to venture capital, I always say allocate a certain amount of money, whether it's 5,000, 10,000, 100,000, whatever the right amount is for you, and then divide it up into 5 or 10 investments. And then be thoughtful about where you're going to, place those investments, knowing that no one of them may, generate a return. Prices are down. Founders who start businesses now are deeply convicted and not just doing it because they watch some HBO special. And so there's never been bigger problems to solve. And now is, I think a huge part of what came out of the Solve SPV. And candidly, I had done something just like this for Angel City, which is the soccer team I had started, which was my first blueprint, which is why I had the conviction to bring it to Heather, is that now is the best time to take the right kind of risk with people you trust and things that seem very obvious and you're high conviction around. You just have to do it in the right way for your balance sheet.
Thank you for bringing up Angel City, because that was my next question, and I see the soccer ball behind you. U.S. Soccer just reached a landmark deal to split pay equally among the women's and men's teams. What was the real secret to getting that done? And do you think it can really be translated to other sports when the skeptics are saying, well, in soccer, the women do make the money?
Yeah, I mean, there's a terrific article that came out today on this topic. So go Google it. It's not on Bloomberg, so I'm not going to mention. But that lawsuit, that case is what got me. I started as an activist and working with a woman named Becca Rue, who led the charge, and having extraordinary leadership like Heather and Solve taking the time to actually build a syndicate. Someone like Becca Rue, who's been fighting this battle as the head of the players union for many, many years behind the scenes, is critical. And so for the first time, the next Women's World Cup is negotiating their own broadcast deal and their own sponsorship deal. It's going to be $500 million on its way to $1 billion. We've never had that. And so it's all of this stuff builds on each other. And I mean, I guess the one thing I'd say to tie this back to Solve also is that, my just interest in supporting the pay equity fight, which is how Natalie Portman and I first came together as activists supporting a union, not as capitalists, led to this capitalist moment with Angel City, which led to Solve. And so I think the most important thing is not just building wealth for women, but building those relationships. And even amongst me and Heather and some of our 20-year relationships, this was the first transaction we all did together. And since then, we've done many more. And we're pulling each other into each other's deals and the like. And so I think it is about finding joy and play and energy amongst your female and diverse relationships, and then just lean into that energy and hold each other accountable and make it a possible side hustle. And, good things will happen. We'll build our own Freemasons network.
Heather, Solve is anything but a side hustle for you. And I'm so curious how these, the recent downturn in market conditions is impacting you and your strategy. We saw, a doubling of exits last year, $57 billion in exit value for public listings. But right now, folks are saying the IPO window is closed. For, a fast-growing venture-backed startup like yours, how are you navigating this time?
Yeah, I mean, Emily, what we do has never been more relevant. And so when I think about our value prop for consumers, help me figure out where I should go, when can I be seen, and how much does it cost in an economic downturn, we are extraordinarily relevant. On the provider side of what we do, help providers, innovative providers, deliver a more consumer-first experience on the heels of COVID, where consumers have experienced more digital-first healthcare, same-day healthcare than they ever had previously. So realistically, I am focused on the fundamentals and delivering real value both to consumers and providers in terms of our growth. And as you do that, good things will happen. Right? We aren't on a short-term time horizon in order to get to, like what Karen Nortman said, the HBO exit. We're here to build a sustainable company that delivers real value and ROI. And this is a great environment for us to be able to do that.
Heather Fernandez, CEO and co-founder of Solve, and Karen Nortman, Upfront Ventures. So great to have you back here on the show. Thanks for sharing some of your secret sauce with us. Coming up, the impact of that Terra collapse still being felt across the crypto world. We'll talk more about that next. This is Bloomberg. Time now for our crypto report, and it's a sea of red in the world as altcoins lead the route. Our Ed Ludlow back here with the latest. What's happening with altcoins?
So heavy selling, declines of between 11%, 17%, a lot of volatility. We're talking about Avalanche, Polkadot, Solana, and there's a lot of movement away from anything that's associated or has any resonance of being associated with Terra and what's happened in the last couple of weeks.
So back that up a little bit, because we've seen, some big changes with Terra. They're trying to save it. Is it going to work?
They're trying to save it. So you have the Terra blockchain and you have Terra USD or UST. And the whole point of the platform is that it allows traders to be nimble, to stay within it. It's supposed to be pegged to the dollar, and that chart that you see on your screen is that it's just seen a complete collapse. Terra USD and also its sister crypto token Luna. The other big point of it was that it was supposed to give you a yield, a set interest rate where you'd have a really tasty return for keeping your assets within the blockchain. And as that's collapsed, what we've seen across altcoins, but also Ethereum, and to a certain extent, Bitcoin is just bearishness across the market. You know, some evidence being the demand for the Ethereum block has just dropped off. And it shows there's a lot of nervousness out there.
Why is Bitcoin behaving differently right now? $29,000.
Right. Hasn't really done anything.
Right.
Bitcoin has been hovering around $29,000, $30,000 a token for some days, some weeks. There's two theories, right? One is that it's like the haven asset within the world of crypto. That if you're going to move into something and you want to stay within the world of cryptocurrencies, you move into Bitcoin. The other problem that we have, you and I discuss this all the time, it has a very high correlation to stocks. And in periods where stocks are selling off, the correlation increases. Now, stocks have stopped selling off. So Bitcoin's kind of stood static and treading water at $29,000 a token.
So what are the crypto bulls waiting for? I haven't really heard a lot of people saying buy now, buy now, buy now.
Yeah, we've asked this question before. What is Bitcoin? Is it an inflation hedge? We're a bit more sanguine on inflation at the moment, so there's been no big move into Bitcoin for that reason. If you look at Ethereum, for example, there's a lot of technical analysis that it's stuck at this kind of $1,800 per token level. It can't go higher. It really needs to push beyond $2,000 per token, as we see on our screen there. That's the severity of the kind of plunge we saw Thursday session going through. And look, we kind of paired some of the losses that we saw, but there's a lack of direction. And they have tried to restart the Terra block. They've tried to get some life back into this USD-pegged cryptocurrency. Not a lot of evidence that it's going very well.
Well, and one of our guests last week said she expects crypto winter to last at least 12 months, maybe 18, and it's not going to get back to 60 for a while.
Yeah, and we had folks from Davos telling our co-anchors, we called it. We told you Bitcoin would fall from 60 to 30. It happened, and it would go back up in a shorter time frame. I think it's a little bit of like,
right,
where are we going with this?
So what are you going to be watching tomorrow and through the weekend? Because obviously crypto will continue trading.
Yeah, so this is the problem you and I have. We go home on a Friday, thank goodness, and we come back on a Monday, and it's 24/7. What's different is the psychology of the Asian session Sunday night. You have a lot of people that have had the weekend to digest it. They get back to their desks in Hong Kong, in Singapore, and sometimes when you and I wake up on a Monday, they've traded because of the words that have been spoken over the weekend. Remember, crypto's 24/7, and so are the media outlets that cover it. So I guess whatever the big thinking is of the weekend.
Well, lucky for us, we get a weekend. Thank you. Ed Ludlow, thanks. Okay, coming up, has the tech bubble burst? Many are calling the current tech rout long overdue. Up Holdings portfolio manager Robert Cantwell with us next for his thoughts on the market moves. As our Bloomberg Technology senior executive editor Brad Stone put it in this week's Big Take, years of wildly inflated valuations, crypto-flavored pyramid schemes, and all manner of naked opportunism have led us to the tech bust of 2022. He has such a way with words, that Brad. So far this year, the tech-heavy S&P 500 has lost just under 1/5 of its value. Among the worst hit, Amazon, Tesla, Meta, and Zoom. But that's just the start. So, has the tech bubble burst? Let's bring in Robert Cantwell, portfolio manager at Up Holdings. Robert, what do you think? Has a bubble burst?
Well, some air has definitely come out of the balloon, but believe it or not, it has far from burst. Companies, there's too much cash on balance sheets. There's too much dry powder in venture capital. A lot of technology companies have hardly tapped debt markets. And so until you really see companies extended with short runways, frankly, there's still a little bit of ways to go. But what's been interesting with this kind of wholesale sell-off is that we've been kind of putting companies into one of three buckets. You either have businesses that have been big growers for 10 years that are hitting a wall. These are streamers like Netflix and Spotify that have to call their business models into question. You have this middle group of businesses like Meta and Amazon with a lot of e-commerce exposure. And it's very clear that just as the market goes up and down, those businesses are going to be affected. So we'll call them in the yellow category of, well, we'll see what e-commerce does, and then those businesses will do just fine. And then there's the green category of business models that are proving to be unbelievably resilient. You had Thomas, from the Google Cloud team on here earlier. He couldn't stop smiling. And that's because cloud computing is just doing so well in spite of how challenging of an environment that we're in right now. And so that's definitely the one area where we're probably spending the most time as investors, because prices have come down on a lot of stocks like Snowflake and Datadog and AWS that all have exposure to that end cloud computing segment.
Interesting. Of course, as you mentioned, Google Cloud was that one bright spot in Alphabet results just a few weeks ago. Now, let's talk about your strategy, because your ETF, Kings, is down with the rest of the market, 34% year to date. How are you evolving your own strategy? I know some of your top stocks are Meta, Amazon, and Alphabet.
Yep. And as I've been mentioning, we've been moving more into some of these cloud computing businesses like ServiceNow. So our strategy is it looks sometimes like a technology index, but we're very pure investors, where we start at the industry, where we find really big industries with a small number of competitors. We find who the market leaders are that are gaining market share or have a dominant position. We make sure that management is being responsible with how they're allocating that capital. And then ultimately, you got to make sure that you're paying a fair price for it. And being down, 34% year to date, when Amazon's down 34% year to date, is painful. And it means that we paid too much for some of the companies that we own. For the most part, we're holding on to the businesses that we own. As I mentioned, Spotify was an example of a stock that we dropped because we just don't believe in the expansion into podcasts. Even management's pulling back investment there. But we're continuing to move money into these cloud computing businesses. And that's the beauty of being one of these early actively managed ETFs, is we can move between stocks without creating tax problems for investors. And everything we do is transparent, so folks can follow along with us while we do it.
As we do. Now, Snap really spooked a lot of investors. I mean, the market was like shaking in its boots. How spooked were you by Snap? Not necessarily Snap in particular, but the signal it sent about the macro environment and the digital ads business.
It was pretty interesting to watch the market process the Snap information. 30 days. It was only a month since Snap was just out publicly reporting that they announced that they were going to miss the low end of their guidance. So that scared a lot of people. Google and Meta had a really bad day. But on that same day, you heard ServiceNow. There's a lot of investor days happening right now. They upped their 5-year revenue target by $1 billion. And so investors are getting a lot of mixed signals. Visa reported that while they're seeing variability across different markets, for the most part, they don't think we're in a recession. So you're getting a lot of different data points that are out there. And I'd say clearly with what the market's done the past couple of days, people view this more as an idiosyncratic issue with Snap, because while they've been growing users, they've had a declining share of usage relative to the rise of TikTok and Reels on Instagram. And that's been a hard thing for Snapchat to have to navigate. So far, we've seen the Snapchat news be potentially isolating, but we're really not going to know for another 6 to 8 weeks when earnings season lights up again.
Now, we saw this big Broadcom-VMware deal get announced today. Tech stocks bouncing back. Where are you placing your bets for next week? I mean, there's so much concern that we're, heading into a recession, that this is going to be some long, drawn-out period of pain, and then other signs that maybe it's just a blip.
It's noisy. It's very noisy. I think you're right that this is just the beginning of a wave of acquisitions. You had a chart up earlier with 5 different acquisitions that we've already seen this year, all in the multi-billion-dollar phase. I think it is extremely reasonable to assume that the second half of this year will have an even faster pace of acquisitions. There's simply too much dry powder out there. There's too much cash sitting on corporate balance sheets, and there's too many valuations that are really attractive. So if you're Google and you're sitting there and wondering how to turn Google Images into Pinterest, you're like, well, this could take a few years, or we could try and go and buy the company for $15 to $20 billion. That's just something that wasn't in the cards a couple of years ago when prices were too high. And so when you have some of these larger businesses whose growth rates are slowing, with some of these smaller businesses that still have penetrating growth rates, by the way, Snapchat might be up for sale. $15 billion for one of the world's very few social networks that works internationally. it's going to be a really interesting conversation, I think, for a lot of these assets that are pretty unique.
Okay.
And we'll see how it goes.
You just gave our print reporters some homework there to chase some deals. Robert Cantwell of Up Holdings, as always, great to have you. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. SolarWinds CEO will be joining us to talk cyber tomorrow.